Hello, I'm Joy Macknight, Managing Editor of The Banker, and I'm joined via video link by Kristalina Georgieva, who's Managing Director of the International Monetary Fund, to discuss the IMF's COVID response and also the global economic outlook. Thank you so much for joining me, Kristalina.
Thank you for having me.
So the IMF, more than 100 countries have really applied for the emergency funding to the IMF. And also the global economic outlook is looking pretty dire. So really, what is the plan to navigate the way through the COVID-19 pandemic crisis? And how much worse is it going to get before it gets better?
Well, let me start from where we are in the world economy, where we are headed, and then talk about actions we take at the fund. Where we are, unquestionably extraordinary crisis that has hit the whole world. We would see in the end of 2020, 90% of the countries having a smaller economy than at the start of the year. Our assessment is a loss of GDP in these 2 years of $12 trillion. Just to give you a picture of what it is Japan, Germany, Spain, Italy not producing for a whole year. But we also have seen in this crisis a response like no other. Phenomenal actions by central banks and by finance authorities that have put a floor under the world economy. And by doing so, by pouring liquidity, they have provided the ground for partial and uneven recovery that we project for next year. What does that mean? Partial, because in the end of 2021, we would not yet reach the level that we had in 2019 before the crisis. More important, uneven, because parts of the economy that are not dependent on contact activities, that are forward-leaning, like the digital sectors or medical equipment, they're moving well. Parts of the economy are really stagnating. And that applies also across countries, not only within countries. That takes me to my most important point, answering your question, how bad it is going to be. The worst of the shock is behind us, when in early March, we were really worried that there would be collapse in the world economy with massive bankruptcies and massive unemployment. That did not happen because of the decisiveness in action. But we are faced with the risk of a tale of two cities, within countries and across countries. And that we have to be really, really concerned about. Therefore, looking forward, there has to be a concentration on how can we prevent inequalities from growing, and how can we help those that are falling behind to catch up. That takes me to the IMF and our role. I'm very proud of the decisiveness with which the IMF demonstrated that we are the world's first responder at a time of crisis. So far, we have extended emergency financing to 75 countries, and we have also offered, through traditional support, a helping hand to countries with strong fundamentals like Peru or Chile, and to countries that are in a more difficult place like Ukraine or Egypt. In total, the portfolio of the IMF today stands at over $250 billion, of which a third has been delivered just in the last couple of months. And we also have been helping our membership to learn from each other. We have this unique function of surveillance. In other words, we take the pulse of individual countries and the world economy. We have done it effectively, offering our members a transmission line of what you do to counter the risks of this crisis.
Okay, and you mentioned there some in the lending capacity that you already have out in the market. I'm wondering what kind of accountability and control safeguards that the IMF has put into place to make sure that this funding actually goes where it's most needed.
Well, thank you for this question. When we provide emergency financing, we do not apply our traditional preparation and conditionalities. It does not mean that we send checks blindfolded and without any oversight. We do two very important things. One, in our systematic engagement with members in our surveillance function, we ascertain the quality of their financial management. We look at how central banks operate, how transparent they are, how finance authorities operate. And two, in this emergency financing ratcheting up we have done, we are asking countries to please audit how they have used the money, to make sure that there is transparency of contracts, that procurement is done for the public to see, and that there are precautionary measures to prevent, we call it, the euphemism is leakages, but basically to prevent any risk of corruption. And we are doing this also with an eye to help countries build in this time of crisis stronger institutional safeguards for the money they borrow from us, but also from the money of their own taxpayers, their own money.
In addition to the COVID-19 pandemic, obviously, there is this specter of trade wars. Obviously, the US and China one is really the most worrying. What can governments and policymakers do in order to maybe stop that rise of protectionism and also nationalism?
Before we were hit by the pandemic, trade tensions were top of mind, and that has not gotten any better. What we see is contraction of trade that is 3 times bigger than the contraction of GDP. We are expecting in 2020 minus 12% in trade. Why? Because countries are retreating behind their borders. They are putting restrictions on medical supplies, in some cases even food items. And there is this concept that perhaps it is better to drop from global supply chains and do everything at home. I am very clear when I speak about it that we are going to pull the rug under our own feet in terms of recovery unless we overcome these tendencies towards more protectionism. And the evidence is very, very clear. Trade is good for growth, it is good for jobs, it is good for poverty reduction. But we also have to admit that over the last decade, we have been somewhat negligent to some of the problems in global trade. For example, the fact that not everybody benefits, and those who lose from globalization might be left unattended. That has to be fixed. We also know that sometimes there isn't sufficient protection of intellectual property rights. There isn't enough attention to a trade regime in which there is transparency of participation. We have to fix these shortcomings, because if we don't, then we risk that retreat behind national borders to turn into a major obstacle to the revival of the world economy. And when we are honest about the problems, we actually can fix it. To finish on a positive note, at the same time we talk about deglobalization, we are seeing a massive increase of connectivity and a leap forward in the digital economy that is borderless. So being able to connect from whenever we are has become more the norm than it was before. And I believe that this is a positive trend of inclusion from education to commerce to production that is going to help us to overcome this tendency to break from each other rather than stay together for the benefit of all.
Excellent. Well, thank you so much for your insights, Kristalina.